Thank you.
Let's talk financing.
Thank you. Can you all hear me?
Yes.
Okay, great. And thanks for that was a great overview. It's a very complicated system of laws that we have, and I learned something new myself every time I hear it. So that was really good. I'm going to talk. I'm the financing specialist. My name's Andrew Chintz at the New York City Accelerator, and as Fatu had mentioned, we provide free service for building owners. And my part is to come in and help with the financing of the work that you want to do. I'm going to talk just briefly at a very high level about PACE financing, which, as you've heard about, is part of Local Law 96, which authorized PACE, and it was accompanied Local Law 97 as a way to pay for the work. And I'll also talk just very briefly again at a high level about other options for financing when PACE isn't a fit for your building. Just as a basic start, just this slide is just why finance energy efficiency upgrades. A lot of people are, don't want to take on additional debt and afraid of doing that. But if done right, it really is a great tool and can make, avoiding upfront costs and making it more affordable. So that's really one of the main reasons to do it, to avoid putting any upfront money in. Obviously, this is a way to address all the requirements that you have for Local Law 97. Financing can help facilitate a project that you've been trying to do, but just haven't been able to pull the money together, or you don't want to assess tenants, or you don't have the reserves, and so it can make a project move forward. And it's also a way to preserve your building reserves for other capital needs. If you do have other capital needs and you also want to do the energy efficiency work, you can combine that in a financing, which will make the financing that much more cost effective. It'll make the upfront costs associated with financing and taking out loans more cost effective. The other key point when you about financing energy efficiency is that there's often a savings component when you make either your equipment more efficient or your building envelope tighter. There are reductions in your energy cost. You're using less energy with energy efficiency. So by reducing those that's a main operating expense with a building, probably the largest aside from taxes. So reducing that expense makes the building obviously cash flow better. And depending on how the loan is set up, you could actually create enough savings that it not only offsets the loan payment each year, but could actually provide some extra cash flow. You can go to the next slide. So as we've said, New York City Accelerator, PACE, which is what PACE is called in New York City, financing was established under Local Law 96. PACE stands for Property Assessed Clean Energy. And what it is, it's a way to finance energy efficiency and renewable energy projects by taking out the financing and paying it back through the tax bill. It's a line item on your tax bill. It borrows another financing tool when public projects are built for communities, such as a water and sewer district or a fire district or a business improvement district. Those funds are paid back through the tax bill by the property owner. So in this case, reducing greenhouse gas emissions is a public benefit. But in this case also, you're borrowing the money to do improvements on your own building, on a private building. So it's kind of a hybrid product in that sense. But 36 different states have authorized PACE. It started in California a little over 10 years ago, and it's a very effective tool for this type of financing. Also, just to mention, it's it's a public-private partnership. So in New York City, it is administered by the city through a contracted entity, but the actual loans are through private lenders. So just to talk about some of the benefits of using PACE financing, you can finance 100% of all of the improvements, and that even includes things like the energy audit that's required to do PACE, and even some ancillary measures. So if you need a new roof, if you're financing solar and the roof needs to be upgraded, something like that could also be included. It's fixed rate, it's non-recourse, and the key also is that it's long-term. It can go out 20, 25 or more years. It's based on the useful life of the improvement that you're financing. So if it's a windows or a roof or a boiler, things that have a long life, that's what dictates what the term is. And the importance of that is that the longer term means you're amortizing the loan longer and the loan payments are smaller. And so those savings can actually offset the payment or more than offset. So this is obviously a way to address your local law 97 requirements. The other key feature of PACE is that if you were to sell the building, this is not really an issue so much for co-ops and condos, but if you used PACE on your building and you decided to sell it, that loan doesn't have to be paid off. It's simply a charge on the tax bill each year. The charge transfers to the new owner and they get the new benefits. There is also a provision in the law in New York City where you can finance some improvements that you recently already finished up to 3 years in the past retroactively. The requirements of PACE are that you need to do an energy audit. That audit dictates, what the measure is that can be financed by PACE. It talks, it's the cost and the savings are all included in that audit. So that's what's used to determine what can be financed. And it's a feasibility study for solar or for some renewable energy system, which you'll hear more about, and Accelerator can also help you with Jose, we'll talk about. The other thing that's needed is if you have a mortgage on the building, because this is a charge in the tax bill and has a senior position from a lien standpoint, the mortgage lender needs to provide consent, which they should because it's a positive for them too. It's improving the asset. The other requirement is that it needs to, the project that you're financing needs to meet a savings to investment ratio of greater than 1. And basically that's just all of the benefits over the course of the loan over the actual loan amount has to be greater than 1. And those benefits can include all the savings. It can include a variety of things, including avoidance of a local law 97 penalty. There are some challenges with PACE. It doesn't work for every building. In New York City, we have C-PACE or commercial PACE. It's for all commercial buildings, including multifamily. But condominiums are not allowed. Condominiums are essentially single units, single homeowner units. And that's what's called residential PACE. It's in a few states around the country, but most states have not adopted it. So condominiums cannot access PACE. However, because there are so many condominiums in the city and many of them have been looking to try to use PACE, we are working with Maxwell-Kates on one of the properties they manage, which is a condominium. And in this case, we think we can do PACE because the sponsor owns 1/3 of the units. And we think we can make a PACE loan to the sponsorship entity. And then, while all the building owners benefit from the improvements, the sponsor will assess the rest of the building owners to everybody pay their pro rata share. We think this is something that can work. It needs to get approved within the city and needs to go in front of the city attorneys, but we're excited about it. And if it works, it will open up a pathway for some condominiums. The other issue with PACE is that, as I said, it's private lenders. They have certain minimum sizes that they'll lend to, which is 500,000 and some of them even higher. So if you have a smaller project, $300,000 project, it wouldn't be able to get done by PACE. What we are working on is bringing in some of the PACE lenders to get approved who will do smaller loans. So that's important because we have so many buildings in the city that need that. Affordable housing properties, I know there's not a big audience here of that, so we don't need to really get into that, but they do have issues on the mortgage consent side. This is just a kind of a roadmap to just, again, help just understand how Accelerator is here to help you and how it would work with PACE. As the building owner, you would come to Accelerator, you would work with an account manager like Fatu and bring me in as the financing specialist to talk about PACE and figure out whether it meets the requirements and whether your building meets the requirements. And, you know, I would help you access one of the lenders or a few of the lenders. And once that's done, you start an application process with the lender. The lender works with the New York City Energy Efficiency Corporation, which is contracted with the city to administer PACE. And then you go through an underwriting process and close a loan with NYC, and they make sure it gets put on the tax bill, which then gets charged to you when you receive your tax bill twice a year. I would stay involved as much or as little as you would like. You know, I'm here as a resource for you. So since PACE doesn't always work, we are also working on bringing another product to New York City. Connecticut and the Connecticut Green Bank adopted PACE. They were one of the first on the East Coast. They came across the same issues in Connecticut, where it was difficult for condominiums, for smaller properties, for affordable housing. They developed another product called Catalyst Loan, which has the same, very much the same components. It finances energy efficiency and renewable energy. It also finances health and safety improvements. It's principally for multifamily housing, which is a big part of what doesn't fit for PACE, condominiums and affordable housing. And it also is 20-year loan terms, because up to 20 years, which is again the key of a lot of financing this and being able to have a smaller payment. So this is something we're working on to bring so that if you can't use PACE, it would be Catalyst will be available. There are other financing options that we can help you with. We have a financing toolkit. There's a little snapshot of it on the right side here. It has a short one-page description of PACE. It has a one-page description of other financing options and a roadmap like this to help, depending on the type of building you are, lead you to the right type of financing. Well, I was going to talk briefly about the other financing options, but the slide went away. Okay, just briefly, the other options that you have are there's a New York City Energy Efficiency Corporation, which is basically our local green bank, and they will do loans for energy efficiency. PACE and the Catalyst are all what we call mid-cycle products. When you're in the middle of your mortgage and you're not ready to refinance your mortgage, that's when those are valuable. But if you are at the end of the mortgage cycle and you're ready to refinance, you can get green mortgages where they'll lend a little bit additional money for energy efficiency and even maybe sometimes get a better rate. So that would be something to look at if you're at that point in time. You wouldn't do that just for the energy efficiency, but if you're also going to be refinancing anyway. There are equipment loan lenders, and you can also lease your equipment. Those are for, you know, smaller projects. There's quick turnarounds for those, and those are other lenders we can help you with. There's also another type of solution where you don't really have to come up with the financing, but you enter an agreement, an energy service agreement with a company who comes in. It's like a turnkey solution, and they do all the work and they finance it, and you just agree to, in the case of a power purchase agreement, you'd be agreeing to buy certain solar at a certain price, or you would be paying on another contract for an energy service agreement. So I will just stop there. I know we're running out of time a bit, so I'll just end there.